We have a 5 million home shortage in this country right now. 5 million homes short. And that population isn't going down, it's going up. Hey, this is Joe Harris from Morgan Financial. I'm here with Nick Morgan from Morgan Financial. And today we're going to be talking about the 5 reasons why people tell you not to buy a home. Not to buy a home.
Not to buy a home.
Not to buy a home. Why would they tell you that?
Yeah, and it's been an interesting week for me doing research on this, and I'm excited to get into it, and I'm excited to see what your responses are.
Cool.
But let's get right into it.
Well, before we do, this is not just for someone who's looking to buy a home. This is certainly for someone that might be looking to buy a home or trying to make that decision.
Yes.
This is also for real estate agents who might get these objections from customers or clients. You know, this could be for someone looking to give advice to a son or a daughter or maybe a parent, who knows, friend.
Yeah.
So it covers a lot of people.
Really, anybody you know or you're trying to discuss this subject about.
Sure.
I think it's going to be extremely valuable.
Cool. Well, let's get into it. I'm still like astounded that there's people out there saying you shouldn't buy a house.
Yeah.
But hey, let's figure out what these questions are, and we'll get into it, and we'll share with everyone out there
Absolutely.
what our findings are.
Absolutely. So number one on the list that I found by far was the fact that renting is cheaper than owning. So typically your renting payment for whatever you're renting is going to be less than your mortgage payment. And with that money, you can do things that can help it grow much faster than you would with owning real estate.
Okay, so let me get this straight. There's people out there that are saying it's cheaper to rent than to buy. We're talking about monthly payment.
Correct.
Monthly payment. And that with the difference, that delta between the payment on rent and the payment on a mortgage, that you take that and you invest it for your long-term well-being, right?
Yes, sir.
Okay. So that whole argument is predicated that rent is cheaper than mortgage payments.
Yes.
And that's not always the case everywhere, right? Mm-hmm. So, you know, there's other things that go on with a mortgage payment. You know, there is every part of that, every payment you make on your mortgage has some degree of principal being made on there. Mm-hmm. So that's going into the equity of your house. Now, let's just assume that home prices don't change, okay, that they stay static forever, which has not been the case historically ever over a long period of time. But let's just pretend that home prices stay static, okay? And that you know, there is a couple $100 difference between rent and your mortgage payment. Let's just pretend that. But the reality is part of your mortgage payment goes towards the equity of your home, and it's savings, right? So you're saving that difference. So, you know, obviously you can only access that one of a couple ways, but, you know, a home equity line of credit, cash out refinance, or selling the home.
Yep.
But at the end of the day, it's you're saving by buying that home, right? And the other piece of that argument that doesn't make sense to me is that rents aren't always cheaper than mortgages. Mm-hmm. If that was the case, there wouldn't be a lot of rental properties unless their cost basis is lower, because you know that the payment's got to be lower for an investor want to buy the house, rent it out, and make the spread between the rent and the mortgage payment.
Yeah, the people renting out the house has to make the money somehow.
Right.
So there has to be a delta there.
Yeah, and the other I'm just thinking about this one out loud. Obviously, I'm on a podcast, but that also says that you can get a better return out there. Let's bring in appreciation of the home. Mm-hmm. Now it's saying that, you know, there's a place you can get a safe, better return than the appreciation of your home, which, yeah, I mean, over time, the S&P has averaged at 8 to 10% a year over a longer period of time. There's years it goes up and years it goes down, which is typically better than the appreciation on a home. But then you have times of extreme appreciation like we saw in 20 and 21 where homes went up 20, 30, 40% in some areas. So that's an argument I can understand, but you need to live somewhere.
Yeah.
So your options are to rent or to buy, I guess, is what they're saying. If you rent, you can actually have a lower payment, take that money, and then save it somewhere else. But I don't agree with that statement.
I gotcha.
Now you don't even own your house. So what if you, I don't know if we get into these questions, but what if you want to paint it something? You're putting equity into a house you don't own. Yep. What if you want the kitchen to look a certain way or a different way, or you want to build in a tool rack or something? It's not your house. Why would you put money into it?
Well, I'm actually glad you brought that up, because that is the literal next point that I have, if you want to get right into it.
Sure, let's do it.
So number 2 is, you have to do everything yourself with a house.
Okay.
There's no landlord. There's nobody taking care of you.
Right.
And that is a detriment. But like you just said, you don't have control over anything.
You don't have control over anything.
Yeah.
Right. And if something breaks in your house, let's say you're renting a house and something breaks, well, if you own the house, you're going to fix it right away.
Yep.
If you don't own the house, you're going to wait for the landlord to come and fix it. Meanwhile, I mean, was that a day, 2 days, 3 days that it's going to go without whatever that is? Or you're just going to fix it yourself and incur a loss. If we're getting real technical,
Yeah.
you're going to incur a loss of sorts because you've spent time and money to fix it.
Yeah.
So, and you can't customize anything.
Yeah. That's my biggest thing. You want to make your place your own.
Right.
And it always feels temporary. I'm currently renting now.
Right.
So it always feels a little bit temporary. You're like, well, a year, 2 years, I might be gone.
Right. And rent goes up. I mean, we can talk about that.
Yeah, no, that was the other point I wanted to make on the first question was mortgage payments are locked in.
Mortgage payments are locked in.
30 years.
30 years. Right.
Locked in. And rent can go up every single year.
It could. Every time you have to do a new contract or sign a new lease agreement, your rent could go up. And then that house isn't permanent because I can go on for hours on this one, but that house isn't permanent because if the investor or the person who's renting to you decides that they want to sell that house or do something different with it, your lease agreement's up. And sometimes there's provisions in lease agreements that say if we're going to sell, you have to be out, we're going to give you 30 days notice.
Yeah.
So you're not even locked into that property, and your rent can go up every month. So, eventually your rent payments are going to far exceed those mortgages down the road.
Yeah. Totally agree. Totally agree. Continuing on, talking about appreciation and depreciation, you touched on it a little bit. But number 3 is the housing market. The bubble is about to pop. It's about to crash.
Are you telling me? Are you
I'm telling you right now. I'm telling you. 2008, it happened for a reason. It's going to happen again, and it's going to happen soon.
Okay, I've heard this. I've heard a lot of people out there saying, the sky is falling. They've been saying this since 2008, a lot of them.
Yeah.
Now they're saying, look, this bubble is going to burst. The housing market is going to blow up. What makes them say that? Because I look at demographics. So if you just look at demographics of the people in the United States, there are 30 million more people that they've accounted for in the United States than there was in 2008. 30 million. That's about a 10% increase in the population, right?
Yeah.
There's probably more than that now. That was 2020 census tract, right? Yep. I think that's the right number. But think about that. 30 million more people. They stopped building. I said housing after 2008, there wasn't a lot being built between 2008 and 2014. We have a 5 million home shortage in this country right now. 5 million homes short. And that population isn't going down, it's going up.
Yep.
And in 2008, we also had 4 times more listings on the market than we have today. 4 times, all right? So that's supply. We have 4 times less listings on the market. We have 30 more people, that's demand. So if supply is decreased and demand is increased, that, I remember from economics, that means that the price is going to continue to rise until there's an equilibrium. And so I don't agree. Now, this is not financial advice. I am not your financial advisor.
Correct.
But I will tell you that unless there's some other catalyst, some other event or something, looking at supply, which is low, and demand, which is still high, I don't see that happening in. And there's one more dynamic I got to bring into this, is that you remember millennials are the largest group of people in the country right now. They're also the largest group of home buyers.
Yep.
And if you think about them, now we talked about demographics. Let's talk about the thought process, what was that? Psychographics, right? Psycho something.
Big word.
Big word. I don't know.
I like it though.
Yeah. So let's talk about their mentality. Is the millennial? Remember, they were late to the game. The average age of a first-time home buyer in 2008. Do you want to guess what that is?
In 2008,
just guess.
maybe like 29.
Close. It's 30.
Oh,
okay.
sweet.
In 2008, the average age of a first-time home buyer was 30 years old. Okay. In 2023, do you want to guess what that average age of a first-time home buyer was?
34.
Okay, man, you're right. 35. Okay.
Okay, so one off each time.
But your thought process was correct. The age has gone up because the millennials were late to the game. They showed up late because back when they were in 2008, 9, 10, 11. When they were of young, impressionable ages, they might have been in their teens at home, and they see their parents go through issues, their friends' parents' bankruptcies, foreclosures, short sales. and all these issues, their mentality is that buying a home is bad, okay? And they didn't do it for years. Not all of them, but, as a group, they waited later. They waited later to get married, later to have kids, and later to buy a home. In 2020, it's like they're like, hey, we need to buy homes now. Like they all ran out and bought homes.
Yep.
And then you saw what happened to the market in 2020 and 21.
Yep.
And so, like I said, the demographics show that it's more than likely not going to be the demographics show that there's still a supply issue and still a high demand. So I don't believe the market's going to come crushing down soon in the next couple of years, foreseeable future, unless there's some kind of black swan type event that we can't account for anyway.
Yeah.
And I don't see prices crashing, and I don't see home sales dropping off significantly. And the demand is still there, even though we had a low home purchase year last year, but prices didn't go down.
Yeah.
I mean, last year was the lowest amount of home purchase since 1995, and pricing still went up, and it's predicted to go up by, the National Association of Realtors and the Mortgage Bankers Association and Fannie Mae. Fannie Mae predicts it to go up by 5% prices. Yeah. And these are big aggregators of data.
Yep.
So I don't, that's a bad reason not to buy a house. And those people are missing out on appreciation as we speak.
Right. 100%. And I think it just comes out of fear that it happened once and history repeats itself. But like you said, it has to be a black swan event.
It does.
And it's something that is kind of extraordinary, and something like COVID, to be honest. And I think
prices went up during COVID.
Exactly.
Significantly. And the other thing, I love stats and data, but look at 2008, right? The market crashed because of the mortgages, because of housing, right? The loans that were written, and I did mortgages in 2008. And, there was the no income, no asset, no job loans. If you didn't have income to prove or assets to prove and you didn't have a job, there was a loan for you. That is not the case anymore. Since 2008, those crazy mortgages, for the most part, are gone.
Yes.
So we've written solid mortgages for, 15, 16 years now.
Exactly.
So a lot stronger foundational base.
Yeah, and thankfully it is.
Thankfully correct, yeah.
So that moves us to number 4, a little bit of a different gear. It's actually talking about mortgage insurance, which has to do with the down payment.
Okay.
And the myth, whatever you want to call it, that you do have to put down that 20%. And if you're not putting down that 20%, you have to pay PMI or private mortgage insurance. And that's a complete scam, because why would you pay insurance to cover the bank?
You sound like a Gen Z or Gen X or whatever. Not Gen Z.
Or cover
what
the
are
lender.
You, a Gen Y?
I'm Gen Z.
Are you Gen Z? Okay.
Yeah.
You sound like a Gen Z.
not.
You sound like a millennial.
I know. I'm sorry.
So I'm sorry I interrupted you. So restate the question very clearly.
It's just saying, if you don't put 20% down, you have to pay the PMI.
Right.
And that PMI is insurance that you are paying to protect someone else. You're not technically protecting yourself in a way you are, which I hope you'll explain. But yeah, people are like, why am I paying to protect the bank? That's dumb. Like, I have to put 20% down. The way the system's set up, it's rigged. It's stupid.
Okay.
I don't like it.
Yeah, you do sound like a whiny Gen Zer. Not that all Gen Zers are whiny, though. So, look, I understand it. But think about this. The bank doesn't have to lend you money, right? They're going to mitigate their risk, or they're going to reduce their risk. Because foreclosures, it's a fact. It costs about 20% of the equity of the home because of all the legal nonsense. If you don't make your payment, you should just get out of the house and give it back to the bank or sell it or whatever. Don't do that. That's not advice. So let's go back. I got a little upset there for a second.
You're good.
But here's the reality is that the banks don't have to lend money. Okay, people don't have to lend money. And they're going to want to lend money and they're going to make sure that they're covered in the worst case, which is you don't pay. And so the mortgage insurance is a monthly payment that a borrower would make in order to have that right to put less than 20% down. Now, on a VA loan, there is no mortgage insurance. Now, they have a funding fee, but that guarantees the loan to the lender, so against default. But that's a VA loan, 100% financing for qualified eligible individuals, no monthly mortgage insurance. There are conventional loans. Conventional just means it's not a government loan, but most people think of conforming conventional, which is like a Fannie Mae or Freddie Mac loan. That's your standard conforming loan, 30-year fixed rate, but they has as low as 3% down payment. And FHA is 3.5%. USDA is 100% in rural areas, So there's a lot of options for people less than 20% down. Now, the mortgage insurance is the cost not to put that money down. Yep. Some people choose that have the money. They have 20% to put down, but they're looking at as a mathematical equation. I'd rather keep my money in my bank, use the bank's money, and I'll pay that cost to entry or to go under the 20%. Mm-hmm. And it allows them to get into a home. And I haven't said this yet. I'm going to look right there. But owning a home is your biggest determinant of wealth in this country. If you don't own a home, the ability to become wealthy is a lot less than if you own a home.
Yeah.
You grow equity in a home.
You do.
Over time. Mm-hmm. And that has not changed in as long as we've been, long as mortgages have been.
For a very long time.
Very long time.
Yeah.
Price of homes over time have gone up historically. Yeah. Can't promise that for the future, but past performance is not indicative of future results.
Yep.
But in this case, it looks pretty good.
Yeah, I agree.
Yep.
100%. That leads us to our last and final reason that I found. And this one's a little bit general, but it's saying the basic premise is that you want to be in the same place for at least a decade, at least 10 years.
Okay.
Yeah, at least 10 years in the same place. And if not, just rent, because the costs that it takes to get a mortgage, the closing costs, appraisal fees, origination fee, the agent fees, all that, if you don't amortize it out across those 10 years at least, it's just not worth it.
So instead, you're going to give 100% of your rent money to someone else?
Listen, I'm not the guy.
Why would you even ask that question?
I'm sorry.
So look, that argument, I get it. There's costs and fees to buy the home. You got to pay to get in, pay to get out.
Yep.
And there's a cost to that. Mm-hmm. But, let's just pretend the cost to get in, closing costs and all those things, down payment. But down payment's equity going into the property. Yeah. So if you just look at the actual transfer taxes and all these things, yep. You're talking about, depending on the size of the home, if it's $1 million home, it's not $100,000, right? $100,000 would be 10%. Yep. It's on more like 15,000, 20,000. Somewhere around there. You're talking about 1 to 2% of the home's value. Now, that home appreciates over time, historically, 3 to 5% on average. So that is gained back in equity, and you're paying down your mortgage every single month, and you're building equity that way. So 10 years is a long span of time. I think they say that more to say like to be able to weather the fluctuations, right? And let's say you have to move. Okay, well now you have a home you can rent out. You have an equity. You can have something that can actually pay you back, and they can pay some other renters. You can rent it to some other poor sap who read those and said I'm not buying a house and they want to rent. Well, you can rent it to them, let them pay your mortgage, and then let them grow your equity, and let them pay down your principal every single month instead of them doing it themselves, right?
Yeah.
And so now you can go buy another house, show rental income to help you qualify, assuming you qualify and you're eligible and all those things. And now you have an investment, an asset, right? Some people say you should rent your house and buy things that make you money. Okay, I understand the philosophy. I don't think you said that one. But I got to live somewhere, and I don't want to throw my money away every single month in rent. That's what it comes down to.
Yeah, I think one of the biggest things is just that the house stays. Like you said, when you leave, it's not like you no longer have that asset. You can sell it, but you can also keep it, and that will keep generating you money.
Correct.
As long as you can find renters, and that's a different discussion in itself.
It is, but it's part of this discussion. It's another means to an exit plan, exit strategy, and a retirement plan for that matter.
Yeah, exactly. So. But yeah, that's it. That's all I have
that's
for
it.
you today. Yeah, that's top 5.
I'm like, I just find it astounding that I get it. Look, if you know you're going to move in a year or two and you don't want to be a landlord, I get it. Probably not the best thing for you to buy a house. But if you know you're going to be somewhere or think you're going to be somewhere for any period of time, 10 years might be a little bit farther out than I would say, but 3 to 5 years, and over time historically, we've seen appreciation over that time frame.
Yeah.
So I don't know. I think a lot of these you see on YouTube or TikTok or Instagram, and I think they're just trying to get shock value, get people to follow them. But there's people that actually believe what they're saying and don't look at the whole picture. And that's what I hope we brought to people today is the whole picture of, look, it's not the only thing. That spread between the rent And the mortgage payment isn't the only thing you should be looking at. You know, depreciation isn't the only thing you should be looking at. Other things to do with the house if you're going to move out of it, like rent it. There's a lot of options here. So anyway, good stuff, Nick.
For sure.
Well, I hope you got some value out of this. If you're not a subscriber, please, if you made it this far, hit that subscribe button so we can hear from you and see you again. Make a comment down below. Share it with someone who you think might find value in this. And on that, we'll see you next time. Thanks for joining us.